Hey guys, welcome back to the channel. Today I'm going to be providing a market analysis update for EGLD as well as going over some very key areas of support and resistance to watch out for. So if you're new to the channel and you want to show some support, please leave a like and subscribe. So my last video I discussed this key level here, this low at $52 that was set in place on the summer of 2021. And this was the time frame where Bitcoin was really testing that $30,000 level as support. And a lot of altcoins were very bearish and bleeding. And this was kind of the area that EGLD turned around and started to make its way back up on this longer term macro shift. So I discussed how that was a very important level that we would not want to see lost. My last video was roughly around this time frame here, just before this capitulation, and I stated if we lost this level, then we would be coming back down to this $42 level as support. So we have since come down, and that was kind of the area we bounced off of in the short term, and we have since reclaimed this region in red. So that's a positive sign. We would like to see this area hold. So if we consolidate here and move sideways, holding this area as support, that would be a pretty positive look. We do want to see price action start to make its way back up and retest this green line here, which is the 50-day simple moving average. So it is declining. So if I extend it out a little bit, you can see how, the price action at which we test it could be a lot lower if we are to retest it later, because currently it's around $79. And if we were to test it, say, in a few weeks, it could be at, say, $64. So it really is a question of when we do test it and not if we test it. So we want to see price action start to reclaim this level and hold it as support. So something like this where we maybe consolidate below it for a little bit and then break above it, hold it as support, and then start trending back up. So something like this would be extremely bullish for EGLD because it would show us how we have a shift from holding this as resistance into support. And the great thing about this moving averages is that in uptrends, we can see some pretty strong support being held. So we have this first initial bounce. If we go back to 2020, 2021, we see this bounce here in September, and then we came back down and we retested this several times, and we held it as support each retest, and this kind of just led us to higher prices, to new all-time highs, and we slowly grinded higher. So that's a very positive thing that we would like to see for EGLD, where we can have support being held on this 50-day simple moving average in the event of a short-term correction. So now I want to switch over to the weekly chart to get sort of a longer-term time horizon and start to kind of illustrate where I think EGLD is headed over the next few weeks and months. So I'm going to switch over to the weekly chart now, and I want to talk about this indicator I have at the bottom, which is a indicator that is going to be showing you the extension between the price action today and the 20-week simple moving average. So I'm going to pull up the 20-week simple moving average on my chart just to give you the illustration of why this is important. So in a bear market, we can see some pretty key rejections off of this 20-week simple moving average. So most importantly, I want to talk about this rejection here we had in March. So we have, a very important macro retest of this moving average. We came back above this, held it as resistance, and you can see following that the market did not respond well. We had a 79% drop over the following 10 weeks. And this was primarily led by Bitcoin, but I do want to alert your attention to this moving average because this was a key sign here where we had this rejection off this moving average, and that led us to new lows. So again, this moving average is going to be declining, considering if we go back 20 weeks ago, we were closing prices approximately in the $130 range. So this will continue to move down because we are averaging lower. But I think that in the next few months we will see another retest of this moving average, and whether or not we have another rejection off of it will be a very important thing to watch out for. So if I extend this down at the current rate of decline, it will be moving down something like this, where in a few weeks and a few months we could be retesting it at some higher valuations, and I would expect that when we do retest it, it will be a very key level to watch out for. So this panel here at the bottom kind of illustrates the percent difference between the closing price and this 20-week simple moving average. So you can see how when we're below it, we're in this red shaded area, and the further we are below it, the further this is going down, and vice versa. When we're above it, it's in the green shaded region, and the further we are above it, we can see how that corresponds to price action being very far above it. So in extreme bull cases, we can see price action actually extended, such as this price action here, that we were extended above this by about 420%. So this is kind of the extreme case where we have, sort of an overcorrection to the upside, and now we're having an overcorrection to the downside. So we're extended very far below this. Currently, the price action is about 50% below this. And if I just draw a line here at the bottom, just looking at this level of underextension, we can see how historically this has been at some very, very key low levels. So if we go all the way back, we can see how this level of underextension in March corresponded to the bottom. And then we didn't quite get this far below in 2020, October and November, but we did have a bottom that was a little bit less underextended than we are today. We also had this bottom here in June of 2021 where we had this exact same level of underextension from this moving average. So we could be extended below this moving average for a prolonged period of time, but I think that, given this level here, how we are this far extended below it, I would say that warrants some sort of bounce, some sort of retest of this 20-week simple moving average, which is again going to continuously decline. So even if we start to move sideways, the level of underextension is going to decrease, considering how this is going to move down and price action is going to remain constant. Obviously, price action doesn't have to remain constant, but if we start to bounce or start to consolidate sideways, then this is going to be coming back up, and we are going to be seeing a retest of the 20-week simple moving average sometime in the next few months. So if we come up like this, that would mean that we're retesting it in August. And again, in August, the 20-week simple moving average could be all the way down at, $85, $90 at its current rate of decline. So that is definitely something to watch out for, because if we have another rejection similar to that of March, then I would expect lower lows and a continuation of this longer term downtrend. If we have a retest of this, we hold it as support and reclaim it, then that's absolutely bullish. We would like to see that. And that would lead me to believe the lows are in place and we're going to be starting this new trend where we have a counter trend to this downtrend. So that's the end of my EGLD analysis. I hope you guys did enjoy. If you have any recommendations, suggestions, feedback, all of those are greatly appreciated. And as always, I will see you in the next one.